We are back with you on the Market Day Report. Thank you for joining us today. I'm Marlon Bowling. Happy New Year to you. We're watching your ag commodity trade, and we have the grain markets off and running. And there's going to be a whole lot of stuff that's going to be impacting your grain trade today. Here to help us sort it all out, we're going to bring in our expert, Dewey Strickler. Dewey is with AgWatch Market Advisors. He's based in Franklin, Kentucky. And Dewey, first of all, Happy New Year to you. I hope you had a good weekend.
Yeah, sure did, Marlon. Thanks a lot.
I appreciate you being with us here as we get things rolling. You're my very first analyst of 2016, so congratulations or my sympathies to you. Let's take a look at the trade here. The grain markets, I was just checking here a little bit ago. I don't know if they're going to get off to a very good start. Looks like corn's over a penny lower this morning in the early going. March down a penny and 3/4 at 357. If we look at the soybean trade here, Dewey, on the futures, here we have the January down 7.5, the March down 5.5. It's trading at 858 3/4 right now. That's pretty close to the low of the overnight session, which would have been about 9 cents higher than that. 8 to 9 cents higher than that at one point. So what do you make of this start here? There's a lot of outside market activity going on around the globe, and that was apparently led by what happened in China in their stock market. You might explain that.
Yeah, we had some poor data, manufacturing data out of China. The Shanghai Composite Index fell 7% overnight, and of course they curbed or halted trading. And that has spilled over into the Dow here. The Dow's down about 388 points as we speak here. And then here, too, you know, if you look, we had some showers in Mato Grosso over the weekend. That's put a little pressure on beans. But right now, the trade is looking more at what's going on in the financial markets than they are in their own fundamentals.
Well, I know a little bit ago we checked the value of the U.S. dollar. At that time, it was down about 90 points. Right now, it's down about 80 points at 98.740 this morning. So a little bit of a knee-jerk reaction in there, but all things considered, it's fairly stable, I guess, considering what's going on in all the other global financial markets. The crude oil has actually had a bit of a boost. Sounds like a little tension in the Middle East that's expanding between Saudi Arabia and Iran. That always has potential to be a real powder keg there. February crude oil at 38.01 right now. That would be your West Texas crude, up almost $1 as we speak over here. Do you think that'll be a big market factor in the coming days?
I don't know in the coming days whether it will or not. I know Saudi Arabia has recalled their ambassador, and I would imagine we'll probably see another country over there or two that will recall their ambassadors as well. I don't think it's going to have a real major bearing on the crude oil market here. That's mostly just stems from the demand and supply of which we have. And been looking for crude to go down about 34, 32 area. We're not that far away from it. I think we'll still got some more lower to go, but I think crude oil will be putting in an important bottom here in the weeks ahead.
The weather is detrimental to the soft red wheat, the new crop, but it should be beneficial to the hard red winter wheat. What do you make of the wheat trade here?
I think wheat's got some more on the downside here, especially when you look at the new crop and even the old crop here for that matter. We've got exports are just not really doing real well here for the old crop contract. That's going to continue to weigh on the market. I think the dollar's still going to work up higher here. That'll keep a little more pressure on the grains here over for the next few weeks anyway.
All right, so Chicago wheat's down 6, Kansas City's down about 8, Minneapolis down 4 to 5. As we head to the break, we'll take a peek at our cotton market, and we're down 20 points in the March at 63.08. So a negative start all the way around in the grains on 2016. We're talking with Dewey Strickler, and we'll have more in 1 minute. Don't go anywhere. Well, we're back with you here on the Market Day Report. I'm Marlon Bowling with you. Our very special guest on the phone line right now, Dewey Strickler with AgWatch Market Advisors. He's based in Franklin, Kentucky. And Dewey, looking at the cattle trade first here on the livestock segment. We did have a few cattle that apparently sold on Thursday, on New Year's Eve. And USDA claims it was a little bit of cleanup type trade, but the price out there was basically about steady with what we had the day before, and that would have been roughly, what, $12 higher than what we had the previous week on the cash cattle market?
Yeah, that's pretty much what we had here, Marlon. I think what we're looking at here, of course, futures have been on fire here for several days, and we're just looking at the cash catching up here with the futures market, and of course box beef has risen here as well, and actually it's up to its highest level since November the 11th. So that's keeping support in the cattle market.
Yeah, we had choice cuts reported by USDA to be at $212.59. That would have been up $3.81 as the upward march continues in that wholesale beef trade. Select cuts were $3.71 higher at $205.22. Sooner or later they're going to have to take a bit of a breather here, aren't they? Because they just seem to be outrunning the pork carcass cutout values by leaps and bounds.
Yeah, that's right. I mean, we've had the specs gotten involved. They're back in the market here after a long absence, and I mean, you could easily see the February cattle drop down to about 133, 132. I think cattle market going into 2016 for the next, say, several weeks will probably just reside in a trade range. I think over the short term, you got a little bit of a gap up here at about the 139.35 area. Basis February cattle, we might see the specs try to take a shot at that level.
Dewey, I heard that the carcass weights on cattle, considering that winter storm that went through the southern plains last week, they were down like 40 pounds, I believe, in the carcass weights last week.
Yeah, we've lost some weight there. I think that will help also to give the cattle a little bit of support.
Now, that's not the case in the lean hogs, I suppose. The cash hogs have been kind of treading water here, basically. And as I mentioned, we were higher in the pork carcass cutout values on Thursday, but they just cannot seem to get much momentum like we have seen in the beef.
No, we can't. You've got more of a technical affair here in the February contract. I could see the February contract trying to get up here maybe around 61, 61 and a half. I don't think we're going to go much higher than that. I look for the hogs to have a trade range from that 61 and a half to the contract low at about 54. And if they go below the 54, hey, I'm not going to be surprised.
What's it going to take to wake up this market?
Oh, I think we're going to have to get a little further along into mid-January to see what retailers are doing as far as like restocking and so forth, and what they're going to be featuring.
I guess the good news is the February contract, the uptrend line is still intact as far as I could tell. So it's a slow grind, but it is continuing to go higher anyway. Dewey, thank you so much. Appreciate it, sir.
All right, sir. Thank you.
Have a great 2016. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. That's the latest, and the livestock market's open in about 5.5 minutes.
All right, great information. Thanks, Marlon.